the Bank of Canada has lowered its overnight lending rate to 2.5%. But how come that rate's not available to you? Let me break down the different types of rates and what's available to you and what's not. So the overnight lending rate is actually just the rate that banks use to borrow money from each other. So if they were going to lend each other money, that's the rate that they're going to go off of. So it's actually not even available to you. I don't know why the news likes to talk about it. It's kind of annoying because then we get lots of calls saying, hey, I'd like to get the 2.5%. That's not available. What they did do was lower their prime lending rate. So prime is what all adjustable, variable, and home equity lines of credits are set by. So a true variable rate mortgage, your payment actually doesn't change. They just lengthen your amortization or shorten your amortization and change the amount of principal and interest that you're paying each payment, okay? That was really important when prime was jumping up because some people were not actually making any principal payment at that point. So a variable rate mortgage means that your payment is adjusting as prime goes up or goes down. So with this 25 basis point decrease to prime, bringing prime to 4.7, that means if you have, say your mortgage is only $100,000, basically your payment's going to go down by $12. Okay, so about $12 for every $100,000 that you have borrowed. Same with if you have a home equity line of credit, that's going to change the amount that you are paying on interest for that. What it does not change is fixed rates. So I had a few calls saying, hey, how come my fixed rate hasn't changed as prime is going down? Fixed rates never change. The length of your mortgage, you've locked in for that term, it's not going to change. It's also not really going to affect fixed rates. Say you're shopping for a mortgage right now. Those tend to follow what's going on with the bond yield and what's going on with the treasury and stuff like that. Okay, so as we're watching what goes up and goes down with the bonds, that's going to affect fixed rates, okay? If we are doing a pre-approval for you, we can hold on to those rates for 120 days. And if they do come down, then we'll get that lower rate, okay? So if you have questions about what this means for you on a case-by-case basis, please reach out, book a call. I help everyday Canadians with their finances. My name's Lara Rockefeller. I'm a mortgage agent here in Norfolk County, but I can actually work all across Canada. So if you have questions, reach out, book a call.